Hey, it's Jim, and this is level 3 of the CFA program, a constructed response set on the topic of performance measurement, the learning module on overview of GIPS. You might remember that this is a relatively long learning module with 20 or 25 really good questions at the end of the learning module. And what we've tried to do is incorporate the specifics of these two learning outcomes in this case study. This is Evergreen Capital. We are fixed income portfolio managers. We have an enhanced core, all discretionary portfolios. Notice that discretionary portfolios is bolded. According to a strategy, treasuries, investment grade, and a small allocation to emerging market debt. We have 3 situations affecting our composite management. So let me read these to you. Redwood, long-standing client in the enhanced core, revised their investment policy, no longer hold emerging market debt. That'll probably have some implications for the composite. Pension fund whose value dropped below the 15 million minimum, wondering what we should do with that. And then Pinecrest has told us that all future bond purchases must go through their CFO. So let me just go back here quickly. What did we bold in this page here? Discretionary portfolios. So of course, if we need to ask somebody for their permission, that doesn't sound like it's discretionary to me. We have 3 interns here working for us, intern 1, 2, and 3, and they've made some comments. Those of you who pay attention to my recordings on each learning module, I regularly say that the Institute loves to ask questions of a comment or a statement or a concluding remark. So here are statements from 3 interns, one on custody fees, one on unknown transaction costs, and one on bundling. So what we'll probably have to do is say, which one of those do we like? Which one of those don't we like? I'm guessing that the CFA Institute, if they give you 3, all 3 are not going to be accurate statements, or all 3 are not going to be inaccurate statements. But that's just me in kind of the way I craft my questions for my students. All right, let's go ahead and look at the questions here. How should we handle that historical performance record? All right, that makes sense. We anticipated that. There we go. During those 7 months that it was below the minimum asset level. And there's a justify on that question too. How are we going to handle the Pinecrest new approval requirement? We have 2 options there. And then question 4, we need to justify whether it's correct or incorrect. So let's go ahead and start with question 1. How should we handle that historical performance? And so what do we know that the Institute tells us? That we've got this fund that looks like this for this period, and then it looks like this for a different period. So we're just going to keep it here, and then we're going to move it over to here. So if you look at those block points, the historical performance stays with the original composite. That makes perfect sense. But moving forward now, we're going to include that in the core fixed in composite. Starting, and that's probably important to write down on your answer, starting from the date of the investment policy change. And of course, what we want to do is avoid double counting, which then probably misrepresents. And then there's probably a whole host of other compounding problems with double counting. Now, what about falling below that minimum over that 7-month period? Well, the GIPS rules tells us that we need to exclude it. So we'll exclude it from that period. In this case, it was 7 months. And then as soon as it comes back, then we'll re-include. Is that a word? I'm not quite sure that's a re-include. Yeah, so justification. Remember, we're justifying. So I said this earlier, the GIPS standards, what did I call them earlier? The GIPS rules, the GIPS guidelines. Yeah, they should not be included in that composite. And what that does is it maintains the integrity of performance reporting. Now, how about question 3? What are we supposed to do by getting this new approval? So option 1, exclude the portfolio from all composites, but include it in total firm assets. Well, a couple of things here. What did I say earlier? We went back and highlighted that word discretionary. So they're no longer discretionary. So there's no way you should be able to include it inside of those discretionary accounts. How about this one here? Exclude it from all composites, but include it in all total firm assets. Yeah, there's a standard in there. In fact, if you go look at the learning module, there's a sentence in there that sounds something like, you've got discretionary here, you got non-discretionary here. You can't pick and choose with what you want to put in your total assets. Total assets are whatever total assets are. So, of course, you need to include it. And then how about these agree or disagree or accurate or inaccurate? So number 1, custody fees should be deducted when calculating returns because they are part of the costs of managing assets. We probably don't like that. If actual transaction costs are unknown, we can estimate those transaction costs. Of course. I mean, we all the way back at the beginning of level 1, we did hypothesis testing and estimation and all that kind of good stuff. So if you can do it with quantitative stuff back in level 1, and you ought to be able to do it here. So 2 sounds like an okay statement. Where bundling fees cannot be determined or identified, then we need only to deduct investment management fee. We probably don't like that because that sounds like we're not reporting full kinds of stuff. So there we go, middle column, incorrect, correct, and incorrect. And there's some justification over there, custody fees, operational expenses, and that makes perfect sense. Number 2, I already talked about that. Yeah, estimation is perfectly fine. But for intern 3, those GIPS require that entire, think about the universe of bundled fees or bundling fees should be deducted and not just the investment management fee. So that was a pretty short essay. Thanks for watching and good luck studying.